Hello viewers, welcome to the Momentum Moves weekly video series. Myself Brijesh Bhatia, Senior Researcher and Editor at Equity Master. So last week we have seen that markets just a shy of 15,000 breakout, and in the previous Momentum Move we have highlighted that once 15,000 is breached we might see a stellar rally, but unfortunately bears have attacked back at around 15,000 and we have are back towards 14,600 levels, and in the end ended around 14,700. Well, if I just look at the chart of the Nifty weekly over here, it's been trending in a range for quite some time. 14,200 on the downside, 15,000 on the upside will act as a resistance. So these ranges been prolonging for quite long now, and we are would slightly stay away from the index trades for the few weeks till the range breakout is not happening. So if you look at the chart over here, it's been trending in a channel formation. If you look at the green line over here, the Nifty resistance is around the similar levels of 15,000 levels, and we have seen a downward trajectory again. So till the market has been trending, we think that one should avoid index. And if you remember, we have been convincingly indicating that the sectors which are buzzing as of now. So we started with cap goods. If you look at the capital goods in last few weeks has been on a stellar run. We indicated sugar space. Sugar space is up around 10-15% from the levels we highlighted. Even we indicated, if you remember, the private versus PSU banks, and the last week PSU was up about 4.5%. So the momentum is there in the stocks into the sectors, and I believe that one should clearly focus on a stock specific action, sector specific action where the buzzing is there, the momentum is there, and look for a trading opportunity over there. So one such sector where we think could be for next few weeks, one should look at, and being an underperformance since the Feb to the mid of April, we have seen this sector being underperforming against the Nifty, and that sector is auto space. So if I just look at the first chart over here, this is the auto index versus Nifty. So this is the ratio chart. What I have done is I have taken auto index chart divided with the Nifty prices. And if you look at the momentum over here, it has formed a bullish harmonic. So basically, bullish harmonic are reversal in nature and calculated based on Fibonacci numbers. So Fibonacci projection and retracements are used over here. So if you look at, we are witnessing bullish bat over here at the ratio chart, which means that the underperformance of auto space is coming to an end, and the bullish momentum would start for the auto index. Plus, if you look at the previous green lines over here, it has been at the support zone. So bullish structure forming at the support zone is a sign of good bullish momentum. If I look at the weekly chart over here of the auto index, so since 2020 March till Feb 2021, we have been a stellar run. So if you look at the primary trend over here, it's been very bullish. And if I just look at second trend and from weekly, if I look at the daily, so let's look at the weekly first and then come on to the daily. So if I just look at the weekly, when the previous highs are being broken out, the retest happen and the bullish journey resumes. So this is again we are witnessing the previous high has been retested. It's been at around the index is at around 9,800, tested around 90 to 9,300, resuming its upward journey. So the weekly chart is indicating that the prices in the index is in bullish trend. And if I just look at the daily now, with the ratio chart, the bullish harmonic has formed on the daily scale as well. We are witnessing a bullish harmonic called bullish butterfly has been formed. And again, with the weekly retesting, resuming upward journey, bullish harmonic on the daily scale. And if you look at the post harmonic completion, we are witnessing the higher low structure. So as per Dow theory, the higher low structure indicates some strong bullish momentum is there. Plus, if I just look at the MACD on the lower panel, again the averages has given a positive crossover. Histogram trending above the integer line, a sign of bullish momentum. So one should keep definitely look for and auto space in coming few weeks where you can see a good trending moves. On the stock side, I would definitely look for a stocks which are outperforming in the auto space and avoid underperforming in the auto space. So you can keep a watch on the likes of Maruti, Bharat Forge, Tata Motors. So these are some stocks which are gaining good bullish momentum, and you should definitely focus on some kind of these stock. Though there is no stock recommendations as of now, but definitely you can do your own research and look for a stock. But we certainly feel that auto space is ready for an good trading opportunity for next few weeks to come, and probably at around 9800 we are expecting back to 11,000, 11,500 levels in coming weeks for auto space. So just to conclude, Nifty would slightly, as of now, avoid being a trending in a range. So derivative trader can look for straddles and strangles onto the derivative side. But auto space, we think, can see some upward from a trading point of view of 3 to 6 months. Definitely, auto space looks an exciting risk reward trade at current point of time. So before signing off, I request click onto the like button if you think that video is really helping you out, and do not forget to comment how do you think that these videos are helping to you, and click on the subscribe button in case you haven't subscribed to our YouTube channel. Signing off, Vijay Bhatia. Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.